VD Mhaiskar joins us now, Chairman and Managing Director of IRB Infra, to walk us through the numbers and how things have transpired for the company for the quarter gone by. Mr. Mhaiskar, construction revenue growth was of 59% in Q4. Do you think the strong execution and momentum will continue?
Yeah, good morning. We have a 11,000 odd crores of order book presently, and this will be getting executed over the next 2 years. So if we look at the execution momentum, to answer your question, yes, we expect the execution momentum to remain strong. We have received the appointed date for our Hapur Moradabad project as early as last evening, and we are starting that project from today. So now only 2 HAM projects in Tamil Nadu remain where appointed date is yet to be announced. All other projects are now under execution, and we expect the execution to remain strong in this year as well.
EPC margins saw a decline in Q4. What was the reason, and do you think this is lumpy in nature, and when will things pick up?
This particular quarter we had a lot of utility shifting and change of scope works which were asked to be executed by us as a part of the project. These particular components primarily don't have any margin as such. As a result, you see the EBITDA margins on the construction looking a bit soft. But in terms of the margins on the project pricing as such, I don't see any pressure, and they would continue to be strong.
Right. Mr. Mhaiskar, morning. So tell us about the funding environment and how's that been, especially for road as well as infrastructure companies. What is the kind of equity funding that you need at IRB over the next 3 years?
Okay, so funding environment has been a challenge in this particular year that has gone by. We have seen a lot of issues cropping up, and there is a kind of trust deficit that we see, and that needs to change. With the election season over, we expect all the different stakeholders to come together and restart the momentum on the infra side. I'm pretty sure that this will change, and liquidity issues will ease over a period of time because a large amount of infrastructure work needs to get done. And my sense is that funding will not be a problem going forward, with tinkering on the policy side a bit.
Okay. Roads has been one of the biggest beneficiary over the last 5 years in NDA 1 regime. Do you expect order momentum to continue the same way in the next regime as well?
I certainly feel so, because if you look at the government's initiative of Bharatmala, it is a stated project which will be rolled over and getting awarded over these next 5 years. The plans are very, very aggressive, and the bidding pipeline, I am very sure, will remain very, very strong. With a stable government in place, I am sure this year itself we will see a lot of projects getting tendered out. And from the conversations that we keep having with the authority and ministry, we hear that there would be an increased allocation towards BOT toll projects as well in this year.
So in the infra space, there's been a lot of optimism post, of course, the new stable regime coming back. What are the top 2 to 3 things that you will watch out for in the sector in terms of changes for faster, better growth?
I think land acquisition issue has been sorted to a great extent, with 3 times market price being paid to the landowners who are parting their land. So that reform is pretty much in place. The project mix in terms of awards going forward will tilt more towards BOT toll projects, is what my sense is, and that will bring in more amount of private capital into this sector, which would be a strong and great message from the government. And I think the order booking will be very strong in this particular year.
Okay, and do you think that the NHAI needs to come up with innovative and strong equity funding proposals for existing road projects so that liquidity can improve?
You're right. That's the reason why I said that they will have to go back to the time-tested BOT toll model, because what happens is, even in a HAM project, the equity contribution is pretty small. If you look at a project financing structure, there is hardly any equity in a HAM project. And that is what, to my mind, makes the lenders nervous, because they feel there is no skin in the game from the developer's side. Whereas when you do a BOT toll project, you see almost 35-40% equity getting committed from the developer side, which gives comfort to the lender also to support the project by way of lending. And this being the preferred route from the lender's side, I think even NHAI, given the large size of project that they are wanting to implement, would tilt to do where they would do a balance between coming out with a good amount of projects on BOT toll so as to ease pressure on funding from their perspective as well. And this innovation would largely help the sector to revive.
Do you think infra specialty roads, the aggression is high from bidders and number of bidders have increased very aggressively?
Yeah, I think that has largely been the scene over the last 1 year, particularly in the hybrid annuity and the EPC space. Not many BOT projects were awarded in the last year, but given the more capital intensive nature of BOT projects, we don't expect that kind of aggression in the BOT space, and that space will continue to see more rational bidding to my mind.
Right. Wanted to understand if you believe that interest rates in the system must come down for companies to have better IRRs so that operating discipline can be maintained across the infrastructure sector?
I think that is completely linked to the inflation levels. The inflation levels somehow have remained very low for the last 1 year, and we haven't seen the interest rates move in tandem with that. So going forward, if the inflation continues to remain low, I certainly expect the interest rates to come down in line with that as well.
Okay, Mr. Mhaiskar, good to have you on the show. Thanks so much for taking the time out and speaking with us today.